Hello, fellow investor. In this video, I'm going to be reviewing some charts that I found interesting for my own portfolio holdings at the close on December 26, 2025. I'll share with you what I'm seeing on the charts and how they've helped form any decisions that I've made based on these particular holdings for my portfolio. As expected, the holiday week showed lighter than normal volume. I expect that to be the same for this upcoming week, as we also have another holiday shortened week. If you enjoy videos like this, please subscribe to the channel. Press that notifications icon so you get notified of future videos, and also press that like button to help support the channel. Let's get started. Let's take a look at Amazon and the 1-year daily price chart. We can see they've been in an uptrend. We have one established that it was at the April 7th lows. We tested it here. It broke down below it here. Came and traded right at that trend line and is trading below it at the moment. But last week, it actually came back and trying to get back in and above that trend line. The 200-day is upward sloping. The 5-day moving average is upward sloping. And the 21-day is also upward sloping. We did have pretty light volume last week. We did have an RSI that came down and touched the 40 line, has since broken above the 50 line, so it is in a bullish configuration at the moment. We also have a PPO that had a bullish crossover in bearish territory and is trying to make its way into the bullish territory as well. I do have support lines that go back to March that are sitting around 210 down to 200. And I also have a resistance line that is set back to the highs in early February. And the shorter term resistance would be at the peaks we saw in November. Amazon sits at 22 in my portfolio. I have a blended value calculation on them at $238.97. They're currently trading below that. There are 46 analysts that cover Amazon with a 1-year price target of $284.70. And a range between 195 and 340. Also noticed a couple of shooting star reversal candles that occurred. I have those highlighted here. You want to be on the lookout for any of those, especially as we get close to earnings. That's when they happened the last 2 times. This one happened about 8 trading days after their earnings, and this one actually occurred on the day of their earnings. So be careful with those kind of candle patterns. I do see that Amazon is in distribution at the moment, and money flow is currently negative, but does seem to be improving. The one interesting thing about Amazon is to look at a long-term trend chart. This goes all the way back to 2006, and you can see that they pretty much traded in this trend channel, rising about 30% per year on average. This 106 is over 3 years. So you got to divide that by 3 to get the slope of that line. It did trade outside the channel a few times to the upper side. Has come down and tested it several times. We're currently trading below that trend line. So this is a very positive chart for Amazon and indicates to me that when the price pulls back, that it's probably time to add a few shares to this particular holding. We'll take a quick look at fast graphs. We can see that they are trading at a blended PE of 32.42 times. They have an EPS yield of a little over 3%. They do not pay a dividend. When we look over this time frame of 20 years, we can see that they've had a few years where earnings contracted, but since 2023, their earnings have been expanding each year, and the future estimate for 2026 and 2027 is they're expected to expand their earnings by 10% and 23%. The orange line is their fair value, which FastGraphs calculates to be 26.13. They're currently trading slightly above that value, and much of their history they've been trading quite a bit above that value. The market multiple is what the market applies to this particular company. That's 116.51, and you can see that they're trading quite a bit below that at the moment. Take a look at Ares Capital Corporation, symbol ARCC, in a 1-year daily price chart. We can see that they peaked out in the middle of July at around $22.38. Since that point, they've been on a downtrend, and I added this longer term downtrend to this peak here, and it stretches out to right here. And then I have a shorter term downtrend which was connected to that peak and connects to a couple points here. We can see that after this downtrend, they did finally break above this shorter term downtrend on about the 24th of November. The 50-day was still decreasing. It took until the first week of December for that 50-day moving average to reverse and start increasing higher. The 21-day is also moving a bit higher. They broke above this point, and they broke above this downtrend line. The 200-day is also right there. It is flattened out, so it's no longer declining. As of Friday's close, it's actually starting to increase a bit. So they traded above this. They come down, tested it, traded below it for a few days, and on Friday's close, they actually closed above that downtrend line, which is pretty close to their book value, which is $20 per share. And that's where I like to make my purchases, is below their book value per share. And ARCC gives you quite a few opportunities to do that over time if you're patient. I do have a resistance line set to the value that was set on the 25th of August, so that sits at about $21.12. And I do have a support line that's sitting right around $18.32, so that would be a critical line of support to watch. I did sell some shares near the peak here. I also sold some more shares in this downtrend, which was basically related to concerns over a couple of large bankruptcies that I don't think were related to ARCC specifically, but the sell-off in credit-based companies was to the downside, and BDCs were caught up in that sentiment shift. So they did decline all the way down to $18 and are making a slight recovery. I picked up some shares at $19.95, and picked up 50 here at 1948 and another 50 at 1958 to bring my portfolio back to weight. This one ranks 20th in my portfolio. There are 10 analysts that cover ARCC with a 1-year price target of $22.50 and a range between $21 and $24. We look at my trade analysis on this one. I first purchased ARCC in March of 2021, and I have traded it several times since then. The green shaded tranches are those that I have sold. The ones that are in the white color are still open. So I'm currently holding about 700 shares with a capital gain of 3,900. Over the lifespan of this holding, they've paid about $8,400 in dividends. My adjusted net investment is only $2.41, so this one will soon, probably within the next year, if I don't make any more purchases or sales, just in dividends alone, would probably return all the capital that I've invested into this company. My current return on my current holdings is 77.5% or 36.7% annualized. If I had just bought and held this one from the start, the return would have been about 29%, closer to 30%, or 6.2% annualized. I've made a total of 29 trades in this one. I have 10 that are open, 19 that are closed, and none of them are losing trades. So my win rate on this one is 100%, and the gain-loss ratio is undefined since there are no losing holdings with this one. Next, we'll take a look at Citigroup, symbol C. This is one that I've slowly been building a position in. They have a book value of $108.41. That's this cyan colored line on the chart, just to keep an eye on where that book value is. This past Friday, Citi did set a 52-week high, and they're also reaching values that they haven't seen in about 17 years. So Citi is actually looking pretty strong at the moment. This is one that it is trading near its book value after trading below it for quite some time. And I didn't know whether this was going to be a long-term holding in my portfolio or not. But after some analysis this past week, I am getting more bullish on Citigroup, and I actually have a price target on them for the end of next year of $160 to $190 per share. And I'll be doing a more detailed video on Citi and how I got to this price target. So be sure to set your reminders so you can be alerted when that video is released this week. They are trading above an upward sloping 5-day moving average, 21-day, 50-day, and 200-day. All of those are in the proper order. They are overbought according to the RSI. The PPO is in bullish territory, and they had a bullish crossover at the end of November before starting this run. And the accumulation is at a 52-week high. Money flow has been positive for most of the past year. I have a stop loss on this one set to $115.08. That was raised from last week's stop loss of $105.99. Citi continues to have the lowest price to book ratio of the 5 U.S. diversified banks, with a price to book at 1.11 at the moment. There are 15 analysts that cover Citi with an average price target of $109.93 and a range between $77 and $134. You can see that that's quite a bit below where I have my price target, and I'll cover that in more detail in that video that I mentioned earlier. Next, we'll take a look at Maplebear, doing business as Instacart, and their symbol is CART. We're looking at a 6-month daily price chart on this one, and I've noted with some notes here what has been driving this downward price is basically announcements from various competitors and investors being cautious and driving the price lower. They did bottom out on the 6th of November. They've broken above this shorter term downtrend. They broke above this longer term downtrend, and they are making their way back up to this resistance line, which I have set to about $48 per share. Their RSI is above 60 at the moment. We'll see if it can hold that 60 and continue to drive higher. They are trading above a 21-day upward sloping moving average, and also the 50-day has stopped declining, bottomed out, and is rising at the moment. And the 200-day has been decreasing, but it has also reversed as of about the 15th of December and is now on the rise, but it is above the 50-day. It'll be very interesting to see if this 50-day can cross above that 200-day here in the next month or so. The PPO is positive, but we did have a bearish crossover in bullish territory, and the accumulation is making its way back to the 52-week highs. Money flow is positive at the moment. So I don't know how long I'll hold this one. I may close this one out when it breaks above this resistance point here at 48. My average cost is around $43 or so. CART did close at a 13-week swing high this week, so that is also positive news. There are 24 analysts that cover CART with an average price target of $53.33 and a range between $40 and $66. Next, we'll take a look at Costco Wholesale, symbol COST, in a 1-year daily price chart. Last week when I discussed them, I only had this one downtrend line that's been tested many times over the past 6 months. This morning I added this longer term downtrend to give us an upside resistance point to keep an eye on. The 200-day has been declining, but does seem to be leveling off a bit. The 50-day is still declining. The 21-day has been declining, but looks to be leveling off on Friday's close. They closed below the support line on the 15th of December, actually traded below that trend line. Last Friday when I looked at Costco, I looked at this unusual amount of volume, which is the highest amount of volume that we had seen on Costco since May 19th of 2022. And in last week's video, I went over an explanation of why I thought that was the bottom. So if you're interested in my rationale on that, go and take a look at that video and see if you agree with me or not. But since that trading day, Monday we were a little bit higher, and for the rest of the week we traded higher, and we're trading right at this support area. So far my thesis is holding up, but we're very early in this transition. I did sell some shares at a much higher price than it's trading right now, and I picked up a few on the way down. I'll probably be picking up at least a couple more shares here in the next week or two, and I'll replace some of these that I bought at higher prices because I think the price is going higher from here. The RSI had been trading below 40 since early December, came down and got to nearly oversold, and it is trading now above an upward sloping RSI and above 40. So I'm going to continue to watch this and see if it can drive higher. We did have a PPO bullish crossover in bearish territory at Friday's close. One thing I find very interesting is despite this sell-off, the accumulation is still at a 52-week high, and the money flow is still positive on Costco. So I'm hopeful that Costco will continue trading higher from here, that we did reach a bottom last Friday on Costco. Costco does trade at a premium. I have a blended value on them at $616. 21 analysts now cover Costco with an average price target of $1,054 with a range between $769 to $1,225 per share. If we look at the trade analysis for Costco, I first entered into Costco on December the 18th of 23, and that was following a breakout above a 2-year consolidation period. I only own 16 shares at the moment. My current investment has a return of 16.8%. Annualized is 22.4%. If I just bought and hold this one, I would have a return of 11.1% or 5.5% annualized. I have traded this one a total of 19 times. I have 18 open trades. I've closed 11 of those. 12 have been winning trades and 7 losing trades. My gains on the winning trades are a little above 4,000, while my losing trades I've only lost 400. So that gives me a win rate of around 63% at the moment and a gain-loss ratio of 5.62 to 1. Next, we'll take a look at CorMedix, symbol CRMD, in a 1-year daily price chart. They have a portfolio rank of 47 in my portfolio based on the market value. I have a blended value on CorMedix of $25.07. There are 7 analysts that cover CorMedix with an average price target of 17.43 and a range between $12 and $22. I have a price target on them of $14, and that's based on this cup with handle pattern. So I'm watching that $14 price pretty closely to see if it can reach that. I did do a detailed video on this holding on the 30th of November before I purchased my shares. So if you're interested in CorMedix, you can take a look at that video and see what my thinking was there. I did buy 200 shares at $9.83 on the 1st of December, and then on the next day, 2nd of December, I sold 2 put contracts with a strike price of $9, and that's expiring on January the 16th, and I sold those for $55 each. So if it continues to move away from that $9 strike, then I'll collect the premium of about $110 on those puts. CRMD did close on Friday at both a 65-day and a 13-week swing high, and I do have a stop loss set on them at $11.05. So we have a downtrend line that was established in June. The downtrend line is set to this second peak here in September, and on Friday's close, after trading right at that trend line for several days, it has closed above that trend line, so that's very positive news. They are trading above an upward sloping 5-day moving average, a 21-day exponential moving average. The 200-day is now upward sloping, and the 50-day moving average is set about 24 cents below that 200-day moving average, so I'm hoping for a crossover there here shortly. So the next point of resistance that I see is this September high, which was right around $15 per share. They are at a RSI of 65.9 currently. They did reach up to nearly 70 just a few days ago. We did have a bullish crossover in bearish territory, but now the PPO is trading in bullish territory. The accumulation, after being in distribution for several months, has bottomed out and is starting to increase, and the money flow is currently positive on CRMD. Next, we'll take a look at Genmab, a biotechnology company out of Denmark, trading under symbol GMAB. This is a 1-year daily price chart. This is one that I would have loved to have been watching earlier in the year, because it had just been consolidating sideways, and then we got a breakout above some prior highs on around the 18th of August. I didn't really find out about this one until October. In a live stream, one of the viewers wanted us to take a look at this company, and I did some further due diligence and thought this would be an interesting one to get invested in and to watch. So we have an uptrend line that was set back here in August. It's attached to this low here. It's been trading above that. We did have a breakdown below that trend line, and for the last 3 days it's been trading right either above or right at that trend line, and also trading at this resistance point that was set back about when I first became aware of this particular company. It started on a downtrend after it reached that peak, so we have a downtrend connected here. It did break above that, came down and traded right at that trend line, has since started moving forward back to where it is today. The 5-day moving average is upward sloping, as is the 21-day. The 50-day is also moving higher after a decrease of only just a few days, and the 200-day is still upward sloping as well. On the 19th of December, I noticed this cup with handle pattern. So based on that pattern, I gave it a price target of $36.64 on December the 19th. This does rank 50th in my portfolio based on market value. I have a blended value calculation on them at $48.20. My stop loss is currently $31.78. There are 5 analysts that cover Genmab with an average price target of $40.40 and a range between $27.48. On the 24th of December, GMAB share price was up 0.21% at the close, and that represented a 52-week high. And then on Friday, it hit an intraday 52-week high at $33.96. It did pull back from that intraday high, but it's trading right at this resistance point. If we look at fast graphs, they have been on a price decline since 2021. Did have a little resurgence in 2022, but they decreased down until April of this year, and then have been rising higher ever since. They're trading right at their fair value of 15.94 times. The normal market multiple sits closer to 50.52 times. They are expecting an earnings contraction for 2026 of about 5% based on analyst estimates, and then in 2027, they're expected to grow 30%, so pretty significant earnings increase expected in December of 2027. We look at my trade analysis, you can see that I have an average cost per share of $30.40. I did sell one put on this one, so I collected premium of $74.48. That has lowered my average cost per share to 28.91%. This has given me a current return of 14.8% or 85.7% annualized. We've been watching Alphabet with the symbol GOOG. Since this one is trading near all-time highs, it has pulled back a little bit. I have a resistance line at this 328 value. I have a fair value on them of $319.47. They're currently sitting at 23 in my portfolio based on market value. There are 43 analysts that cover Alphabet with an average price target of $307.88 and a range between $190 and $400. I mentioned in previous videos that I'm a bit concerned about how extended they are above their 50-day and 200-day. They are currently trading 7.28% above the 50-day, and that has risen from 7.15% last week. And their 200-day, they're trading 45.89% above that 200-day, and that has risen from 44.89% last week. I do have a trim point or a stop loss set to $304.79, and that is up from last week at $300.23. I did close out 5 shares about 2 weeks ago. It had traded down below my stop loss. It has since recovered and moving higher. I have mentioned several times that we see a negative divergence on this. So as the price has moved higher, the RSI is actually moving lower. And that's doesn't indicate that there's going to be an immediate pullback, but it is something to be watchful. They did drop below 50 on the RSI on the 17th of December. They've done that several times, lasting only about 1 day. or so. So that's positive news that they're able to maintain that line in the RSI without dropping too far below it. They have reached an RSI of 60, but it looks like it's rolling over and moving lower. We have that same negative divergence on the PPO. So there's two indicators that are indicating a pullback might be likely in GOOG. So it's something that we'll have to watch in the near term. There was a fairly light volume this past week, as we would have expected in a holiday shortened week. Next, we'll take a look at Meta. They rank 33rd in my portfolio currently, but I am desiring to grow this position over time. I have a blended value calculation on them of $817.73. There are 43 analysts that cover Meta with an average price target of $819.40 and a range between $645 and $1,117. They had their big drop in price after their earnings when they mentioned the amount of capex they were going to be spending, expanding their data centers. They later came out saying they were going to make a 30% cut in their metaverse business unit, and that helped the price recover slightly. There is a longer term resistance line where they're currently trading that was set back in May. There is one set at the gap down price, and that's sitting at about 682. There are several times where they trade intraday where they're trying to break out above this 200 days, so they get up around 670 or a little bit higher. So I've been taking the opportunity to buy calls during the day when they're down in price and hoping for a resurgence in an intraday surge back up to $670. So I bought 5 of these calls since the 26th of November. 4 of them are currently closed, so I profited about $2,265 on those calls. The open call that I have is slightly underwater, but I'm still holding that one, waiting for any kind of resurgence in their price. They are battling this 200-day moving average, trading just under it. The 5-day moving average is upward sloping, as is the 20-day moving average. The 50-day still looks to be declining, but they have closed above that for the last 3 days, it looks like. Also on December the 19th, I noticed a cup with handle pattern on this one, and that would give me a price target of $733 on that pattern. If we look at the intraday, and let me go out to 10 days, you can see how many times it has jumped above the 670 mark. So that's about where I have my exit point on that last call that I have. I'm waiting for a bounce up to that price. It's tried it several times and pulls back from there. Friday we started out a bit higher, but there was pretty much selling through the rest of the day. It looks like the last few hours of the trading session it was trading flat or moving back upward. If I go back to the meta chart, we can see that they are trading above an RSI of 50, so they're in bullish territory there. And on the PPO, they are also in bullish territory at the moment. Money flow is currently negative. We had a big distribution point, reaccumulation, more distribution, and we are moving a little bit higher in accumulation at this point. Next, we'll take a look at Jackson Financial, symbol JXN. They're in the financial sector and have been trading very well along with the rest of the financials over the last quarter. They did reach a 52-week high on Wednesday. They closed slightly lower on Friday. They also have a cup with handle pattern, which would give them a price target of $143. This one ranks 25th in my portfolio based on market value. They have a book value per share of $141.89. And when we look at discounted cash flow, they actually have a blended value of $306.30. There are 5 analysts that cover Jackson with an average one-year price target of $108.80 and a range between $95 and $128. I have a trim point or stop loss on this one set at $102.12. They are currently trading above an upward sloping 5-day moving average. They had a resistance point set on December the 12th, which they did break above that and have closed above that this past week. So that now becomes a support line. The 21-day is upward sloping. It crossed above the 50-day on December the 10th. The 50-day is also upward sloping, and the 200-day is upward sloping. They are in overbought territory on the RSI, and their PPO is in positive or bullish territory. They have been under some distribution since the 23rd of September, and the money flow is currently negative. If financials continue to perform as they have over the past quarter, I still think this target is in reach. The blended value of $306 would be a struggle. Let's go look at Fast Graphs. This is a fairly young company trading publicly. They are trading above their market multiple. The market has tended to value this company below their fair value. Fastgraphs has their fair value calculated at 10.49 times, and the normal PE is only 3.1 times. They have an EPS yield of 28%. That insinuates that it is a very good value at this point. They also have a dividend yield of 2.96%. They are expected to grow their earnings by 16% this year. We're getting very close to the end of this year, so these estimates should be fairly accurate, but even the next 2 years, analysts are expecting them to grow 17% next year and 6% the following year. If we look at my trade analysis on Jackson, I first entered into this holding on February of 2023. I have traded this one a total of 20 times. 6 of the trades are open. 14 have been closed. 19 of the trades have been winning trades, and 1 is a losing trade. On the losing trade, I lost $115. on the winning trades. I've made on average $472.03 on those. That gives me a win rate of 95% and a gain-loss ratio of 4.1 to 1. On my current holding, I have a 91.9% return. Annualized, that's 102.8%. This one I probably would have done better just buying and holding because it's up 128.9% or 44.4% annualized. So Jackson has been a good performer over my holding period. I still hold 100 shares, which is right at the portfolio allocation that I want, despite the upward price movement that we might see in Jackson Financial. Next, we'll take a look at Prudential Financial, symbol PRU, and a 1-year daily price chart. On this one, on November the 21st, I had a price target of $113, also on a cup with handle pattern. It did shoot up to $118. So as it approached that level, I was trimming some shares because at the same time it also hit a resistance level that I had set back in January, and you can see that it went up and touched that resistance level almost to the penny and began trending downward. The 5-day is trending downward. The 21-day is still upward sloping. I expect these to get pretty close to one another here in the next few days. The 50-day is upward sloping. The 200-day is upward sloping. We did have a golden cross in this one around the end of November. This one I was waiting to see if we could maintain support at this RSI level of around 67. It came up and touched that and was rejected. It finally broke out above it, and that's when it went on this run. I was hoping that it would maintain support there at around that level, but it has broken down and back to the 60 level at this point. So I'll watch for another reversal in this one because it is below my portfolio. Wait a little bit after selling these handful of shares. But anyway, I'll bring it back to portfolio weight fairly soon. The book value on this one is $90.69. The adjusted book value per share is $99.25. It does get down to those prices on occasion, so if you're patient, you can pick those shares up at that price. They do have a dividend yield of 4.74% and a 5-year dividend growth rate of 4.18%. There are 10 analysts that cover Prudential with an average price target of $116.80. Let's go see what the range is on Prudential. I didn't write that down. So the range is $101 on the low side and $136 on the high side, with an average of $118. We also had a bearish crossover in bullish territory, so it does look like it's going a bit lower. Where it bottoms out, I'll have to keep an eye on that over the upcoming weeks. If we look at fast graphs, they predominantly trade underneath their normal market multiple as they are right now. The end of next year, that would put them at a price of $148 if they could trade up to that level. And their fair value is much higher than that, of $223.94 at the end of next year. They have had a few years of declining or contracting earnings per share, but they have had expanding earnings per share since 2023. They're going to close out this year at somewhere around a 15% growth in earnings, slows down to 3% next year based on analyst estimates, and only 6% the following year. So Prudential tends to be pretty steady, and the trading just waiting to get down to that book value and purchasing and letting it rise and trim your position and then wait again for it to get closer to that level has been a good strategy over the last few years. If we look at my purchases, I've entered into this one many times. I bought my first share in June of 2021. The ones that are highlighted in green, I've actually closed out. So I've made quite a few trades in this one. Currently hold 285 shares. My average cost per share is $86.85. My current investment is at an average cost of $95.55. This one I have a current return of 51.8% or 19.5% annualized, which is much better than just a buy and hold strategy of 21% or 4.8% annualized. I have traded this one a total of 45 times. 19 are currently open, 26 are closed. 38 of those have been winning trades and 7 have been losing trades. On the losing trades, I've lost an average of $162, and on the winning trades, an average of $317 gain. So I have a win ratio on this one, or a win rate, of 84%, and my gain-loss ratio is 1.96 to 1. Next, we'll take a look at Rocket Lab, symbol RKLB. This is a small holding in my portfolio, basically just to keep track of this particular industry. From the low they reached on the 17th of December, they are up about 30% since that point. They are trading, they closed on Friday slightly below the 5-day moving average. They had been trading above that. The 21-day is still upward sloping, as is the 50-day. The 200-day is also upward sloping. This one also has a cup with handle pattern that I noticed on 12/19 was actually confirmed. So we have a price target on this one of $89.49. My stop loss or trim point is $64.98. That was raised from last week's stop loss of $61.81. I don't have any valuation on this company because they have yet to report a profit, but there are 13 analysts that cover Rocket Lab with an average price target of $53.23 below where they're currently trading, and they have a pretty wide range of estimates, anywhere from $16 all the way up to $90 for those analysts. They did get into overbought territory. They have come back down out of there. It'd be nice to see them hold either the 60 RSI or the 50. They do have bullish PPO at the moment. Accumulation looks to be near a 52-week high, and the money flow is positive. Next, we'll take a look at RTX. And they've been trading in a trend channel since the beginning of the year. You can see they come up and test the top of the channel, come down to the bottom of the channel on several occasions. Anytime this one drops to the 50-day moving average, it's usually a pretty good time to pick up shares. This one has a blended value of $121.84. So it is trading at quite a premium at the moment. There are 14 analysts that cover RTX with an average trade price of $179.36, with a range anywhere from 140 to 215. I had trimmed some shares as it came back to the top of the trend channel after buying them here at the 50-day moving average. So I'll be patient and wait for this cycle to begin again and get down closer to the 50-day moving average or the bottom of this trend channel to pick up some more shares. Ranks 38th in my portfolio based on market value at the moment. If we look at fast graphs, you can see that they are very much extended above both their normal market multiple and their fair value calculated by fast graphs. Lastly, we'll look at UPS in a 1-year daily price chart. You can see that they've broken out above several downtrend lines, including this latest one that we have here. They have broken out above a resistance point and are currently trading above this one set at about the end of July, and this one that is at the beginning of July. That'll be the next resistance point at about $102.80. I have an intrinsic value on UPS of about $107. I have a price target on them of $105, so they're trading about $5 below that value at the moment. I've been watching this level of the RSI where it had found support at the 40 line and then broke out above the prior peak, came back down and tested that once more, went into an overbought condition, continued to hold that support line, dropped down below it for a day or two, and then has since been trading above that trend line and is continuing to hold that even now. So I still think UPS is providing some steady upward movement in its price, but it will face resistance at its intrinsic value. The PPO is also in bullish territory. It's been in distribution for quite some time. Had a big sell-off at the end of July, beginning of August. It is starting to get above the low that we saw at the beginning of December. The money flow is currently positive, but over this past year it has spent most of its time in negative money flow. If we look at fast graphs for UPS, they are currently trading very near their fair value at 15 times. Their normal market multiple is 18 times. They have been on quite a decline since 2021 with pressure from Amazon shifting their shipping away from UPS, but they seem to be recovering at the moment with probably higher margin shipping options. So they had a price decline, or will have one for 2025 at about 10%. This is going to conclude a 3-year decline in earnings. Next year, analysts expect them to return to growth with 3% in 2026 and 11% in 2027. If you found this video helpful, please remember to subscribe to the channel. Press that notification bell to get notifications for future videos. and also press that like button. It really does help to support the channel and help other viewers find this information as well. I wish you the best in your investment journey, and remember to trade well.